Before we get started with the information, I just have to say that I feel extremely lucky to have incredible business partners in this real estate career. And I'd like to introduce all of them to you guys.
So I'm Paul Balzati. I'm the broker owner at John L. Scott Real Estate in Bellingham. And I started when I was 21 and I've been doing it ever since. So 17 years, which is super crazy, all at John L. Scott. And I'm excited that we're putting this on and that we'll be able to kind of share this with you guys right now and then also on YouTube as well. So Rebecca.
Cool. I am Rebecca Jancic, and I am part of Team Abbott with my partner Claudia Abbott at Umpqua Bank. And combined, we have over 30 years experience in the mortgage industry, and we absolutely love what we do. And we're really, really thankful to be here and be able to educate and share some knowledge for all of you. So thank you. John?
Yeah, I'm John Bacon, and I work at Whatcom Land Title. And I'm here to enlighten you on the secrets of title and escrow. So most people don't even know what that stuff is until they buy their first home. So hopefully we'll give you a heads up and you can go into it knowing some stuff.
Thank you, everyone. Yes, you are correct, John. I had no idea when I was buying my first home. I didn't know what title was, what they did. So this is such a huge wealth of information. I'm so thankful that all of you guys can join me today and help all of the viewers. And so let's go ahead and get started.
All right, let's go to the slides.
And so as realtors, the most common question we get is, when is a good time to buy? And that is a really good question just because the market does change throughout the year and everyone wants to get a really beautiful home for a really good price. And so we get asked that a lot. And so as you can see here on this graph, the inventory changes throughout the year. So as you can see, the spring and summer, we have a lot of homes on the market. But at the same time, there's a lot more shoppers. And so the competition is there as well. And so throughout the year, the supply and demand changes, but it kind of stays steady throughout the year. And so in the fall and winter, we have less homes on the market, but then we have less buyers. And so really the best time to buy is whenever the right time is for you. So you know your circumstances, your financial standpoint, all of that. And so we just like to meet you where you're at, gather all the information and take you from there. So, before we start looking at homes, we really like to fine tune and get clarity on what is important to you. And it's important to keep in mind, especially when you are a first-time home buyer, that no home is going to be 100% perfect. And that is true even if you have a really high budget or if you are custom building your home. You realize after living in it for 3 to 6 months, you start to realize, hey, I really wish the pantry was a bigger size, or I really would prefer this layout or that layout. And so the point is, no home is going to be 100% perfect. And so we like to focus on what we call an 85% rule. And to help you navigate through that, we sit down with you and get your goals written down, and we really specify your must-haves and your like-to-haves, and then the why behind it. We like to know what it is you're looking for, what suits your lifestyle, and then from there, that's when we can start looking at homes available that really match that criteria.
Okay.
But before we can go out and look at homes, it's really just as important to get the financing together. And so we are partnering with Umpqua Bank. They are such an honorable company. I am so proud to be working with Rebecca. She is a good friend of mine and a really professional business partner, someone I can trust and rely on and highly recommend. And Rebecca's going to take it and cover all the lending side.
Perfect. Thank you so much, Oksana. I'm going to share my screen. All right. Can everybody see that? Cool. All right. Let me look at. I probably should have practiced this a little bit more. Oh, why is it not working? There we go.
I think that was good. I think it looks good.
Okay, good. So for today's agenda, there's a few key pieces to the home buying process that are going to be most important to you as a first-time home buyer. And that's going to be, what does it even take to become a home owner? How am I going to budget plan so that way I know I'm buying in my comfort zone? What does a loan pre-qualification even look like? What does the home finance process look like? And some tips to get started. So a big thing right now is interest rates. So as you've probably heard in the media or on social media, interest rates are at an historical low right now. And so what does that mean to you, the buyer? Well, as you can see here on this screen, we're going to talk just an average. And so they're going to start with a purchase price of around $312,000. That's a pretty good price point here in Whatcom County for a first-time home buyer. And so the example is if the rate is 3.5%, that means your monthly payment is going to be right around that $1,100 mark. And if that rate jumps even up to 4%, so that's just an increase of 0.5, you're going up to about $1,200 now. So there's a big difference in price to you and your bottom line. If we look at a different purchase price, this is closer to what Whatcom County average is. That's a purchase price of $500,000. It's going to be the same example, that 3.5 and that 4%. And again, now you can see that the difference is still right around 100, little plus or minus 100. So again, that does have an impact to you and how much house you can buy. There's also some really great resources that we have available. So the first resource is going to be your lender. Always ask all your questions. There's no such thing as a silly question when it comes to home buying. You are a unique individual, and your credit and your income and your assets are all very unique as well. But here, the CFPB, Freddie Mac, and Fannie Mae, they all offer some really great information for you. And then again, if you have any questions, reach out to your lender and we can provide further information for you to kind of surf on the web and get additional information just in general from the government themselves and the people that make the rules. So do you qualify for a home loan? So I kind of just briefly mentioned income, credit, and assets. Those are the three key factors that your bank is going to look at and your lender is going to help you kind of analyze. And so before you make an offer, it's really, really important to know what you can buy. So when you're working with someone like Oksana, you know, it's really great for all of your time to know what type of house you can look for, because there's nothing worse than looking above your price range and getting your heart really excited, and then you just can't afford it. So let's talk numbers and let's get everything in line before you start house hunting. So when you have your consultation, we want to know the whole picture. So, you know, what does your income look like? How do you get money monthly? What does your employment history look like? A really good rule of thumb is we want to see at least 2 years work history. Assets. Even if you're taking advantage of a program like a 0% down program, you're still going to need to prove that you can pay for the home. So we do want to see some assets. Credit history. You have to have a credit score, and we want to see really responsible credit usage. And if you have any questions about that, those are really great questions to bring to your consultation. So Claudia and I can help make sure that we answer anything specific to you. So budget planning, there's more that goes into you being a homeowner than just your monthly payment. So there's going to be your principal and your interest, and then there's going to be homeowner's insurance, taxes, maybe mortgage insurance if it's applicable to you. There could potentially be a homeowners association fee. So again, these are things that you're going to want to make sure that you're discussing and asking these questions when you're out looking at properties, because if there's additional fees associated to that ownership, we're going to have to count that in our ratios. Utilities are another thing, kind of one off, but we do want to know that we're setting you up for success and not for failure. So down payment. The minimum down payment is totally going to vary by every individual. There are programs available where you could buy a home for $0 down. There's opportunities to get grants. You can get gift funds. But really the best rule of thumb is make sure your money's seasoned and make sure we can source it. So however it's coming to you, really the key factors are making sure it's seasoned and sourced. Next up, we have closing costs. So closing costs are basically the costs associated to closing and funding the loan. Again, this is going to vary and it's going to be very individual to your specific situation, but typical costs are going to include the lender origination fees. There's going to be your third-party fees, credit report, flood reports, home appraisals, inspections. Those are all additional costs that go to you buying this home. Title and escrow fees, those are going to vary as well. And then there's going to be the prepaids. So the prepaids are going to be your taxes, your homeowner's insurance, and your interest. So fun fact is when you buy a home, you don't actually have to make that first monthly payment for at least an additional month. And so we as the bank want to take some of that money and put it in reserve. And so that's where those prepaids are going to come in and why we have to take an additional interest. Again, season and source those loans.
One thing, Rebecca, I just wanted to point out is with the closing costs, a lot of times your realtor can negotiate paying for the closing costs into the transaction. So like if the purchase price is $400,000 and the closing costs are $8,000 above their down payment, a lot of times you can say, okay, instead of negotiating on the purchase price, we're going to ask for the seller to pay the $8,000 in loan costs for the buyer. So then the buyer maybe most of the time the buyer is comfortable with the rates this low, financing that higher amount, but they want the credit so that they can come up with less money. And so in multiple offer situations, that can be difficult, but in most transactions, the buyer's agent can work in some closing cost credit for the buyer.
Yeah, no, and I'm really glad you brought that up. And depending on the program, a lot of times the seller really can pay all of the closing costs. So again, it's very individual based on what program you're going for, but it's a really great opportunity to be able to save on that upfront cost to get into the loan. And so since we're talking about costs to get into the loan, that goes right into mortgage insurance. So the general rule of thumb is if you're not putting 20% down on the purchase price, there's going to be mortgage insurance associated to the loan. And it's really going to vary by how much you're putting down, what your credit score is, and what that loan program is. So again, it's dependent on what program you're going for, but it's just a good rule of thumb. If you're going to start out in that 0 to 5% range or 10% range, you're definitely going to have mortgage insurance. So the better your credit, the better the cost of the mortgage insurance is going to be. A really cool thing that Claudia and I offer at Umpqua, and all Umpqua loan officers offer, is it's called the Umpqua Purchase Advantage. And so what that does for you as a home buyer is it takes your pre-approval letter one step further, and it basically makes you compete with cash. So this means you have been fully underwritten, your income, your assets, your employment, everything's been verified, and the underwriter's given their stamp of approval. It's basically your letter to just go find a property and then let's approve that property. So in this really competitive market that we have right now, the huge benefit to you is you could potentially cut down what right now is on average between 35 and 45 days to close a home loan. You could cut that time down to 2 to 3 weeks if you really needed to, based on area and the appraisal turn time. So it's a huge, huge benefit. And again, you're shopping with confidence at that point. You have nothing to worry about when that underwriter reviews it. Really at that point, we're just approving the property. So it's a really, really cool program. We're excited to offer it. And it's something that could be a really huge benefit to you when you are going up against multiple offers.
Absolutely.
So next up, so what does applying for that home loan really look like? So again, we want to know your income and we want to know what kind of assets you have. And so how we're going to uncover those numbers is going to be your pay stub. So we're going to want to see your most recent 30 days pay stubs. We're going to want to see your last 2 W-2s. That just gives us a really good understanding of how your employment income is growing or varying. So sometimes we can take averages. So it really just helps to see that overall picture for you. 2 months bank statements, that's going to be your assets. So we just want to make sure you have a healthy reserve of assets and you can manage your money in a healthy form. 2 years tax returns, again, depending on what type of employment you have and really your individual situation. Sometimes we don't need them, but we like to ask for them just in case. And again, really depending on your type of employment and your individual situation, there could be additional documents, but that's just a really good base. And this is a great visual. We really love this. So this is going to give you kind of the loan process at a glance, and it's going to help you see, okay, what is it that I'm getting into when I say, yes, I want to buy a home and I'm going to finance this home. So kind of like we've talked about, you're going to consult with your loan officer, and then you're going to give us all of your required documentation specific to you and the loan program that we fit you with. We're going to go ahead and send you those initial loan disclosures. That's all the nitty gritty. Those are all the numbers broken down for you to have a really good idea of what your investment is. Then we're going to hop over to the appraisal. We're going to order that appraisal as quickly as possible so that way you know kind of what you're purchasing and what that value is. The documents are going to then be submitted to the underwriter who will then approve your loan. We'll make sure that you have adequate homeowners insurance. And then we're going to go ahead and send all the final documents over to title and escrow. They're going to follow up with you, schedule your appointment. Then you're going to go straight to closing. You're going to sign. We're going to record and fund your loan, and you're going to be a homeowner. So as I mentioned, I am part of Team Abbott with Claudia Abbott, and we are here to help. So if you have any questions, we would love to connect and answer your home buying questions.
All right, that's awesome. Very, very, very good. Good stuff. I wanted to kind of, just before Oksana, before you take back over, I want to mention that at the end, we're going to do questions and answers, right? So we just have 5 of us on right now, other than the 4 hosts. So the first 2 people that ask questions get a $25 Vitality Bowl gift card. So you have a 50-50 chance already if you're on, if you just jump on with your question right when we finish up, and we got another 15, 20 minutes, or probably another 25 minutes of stuff. But just if you have questions, write them down and we'll have questions and answers at the end.
Thank you, Paul. And thanks, Rebecca, for all that information. You guys honestly do so much work, and I appreciate all that you guys put into the transaction. And so, so once we get all that clarified with the lending side, now the exciting part comes where you get to start shopping for your home. And once we find that home that you really want to put an offer on, of course, I will be there to guide you every step of the way. But just to go over the steps briefly, once we get the offer, we then negotiate the price and the terms. And so we then figure out, okay, do you want to go in asking price? What do we want to offer for earnest money and all of that? And then once we get the mutual acceptance, so once the seller accepts our offer, this is when we get to turn in the earnest money to the escrow company, and that is where it's held. And then if the transaction goes through, then it goes towards your purchase. But if, let's say, something doesn't pass during the inspection or contingencies, then you do get that back. But that's when the earnest money gets deposited. And then after that is where you get to complete your loan application. And then you'll work with Rebecca and get all the documents turned in, your pay stubs, get all that verified. And then we go on to the contingencies. And so most homes, they come with a financial contingency. And so that's when we make sure that, hey, we will go forward with the home as long as the loan process goes through. Or sometimes the contingencies are an inspection. So let's say we would like to move forward as long as everything, there's nothing majorly wrong with it. And so during the inspection period is when you have the time to decide whether you want to move forward or to say, hey, I'm not okay with this, and just walk out. And so then we move on to the appraisal. So once we pass the inspection, everything's good to go. This is when the bank will order an appraisal. And that just means that we want to make sure that the loan is able to be financed. And so the bank would then go and do their own verification to make sure that it is safe and good to go. And then that's when we move forward to escrow. And so, Rebecca, did you want to touch base on the appraisal?
Yeah, I just wanted to jump in really fast. So the appraisal process, it changes and varies by the time frame, but really the importance to you and the importance to us as the lender is that's the value that we are going to be placing on your new home. And so your purchase price is your best foot forward saying, I want to buy this property at this amount. The appraisal is going to verify and confirm that, yes, that property is valued at what you offered, or sometimes it can be above, which means you're walking into instant equity. Sometimes it can also be below, and that's when we all have a different conversation, but that is basically the bottom line for us to approve the property. So as we kind of touched on earlier, we're going to approve you, your income, your assets, and your credit, and we're also going to approve the property. So that appraisal is kind of like the final check for us to be able to final approve your loan, which would allow us to then send those documents over to title.
Thanks, Rebecca. Yeah, thank you so much for adding that tip. That is so helpful to know. And once we get past the appraisal process, then it moves on to title and escrow. And so that's where things get recorded and finalized. And John, do you want to touch base on that?
Yeah, we got you.
I'm going to go into my PowerPoint presentation.
Now, when you go to your PowerPoint, you're going to go black. So we want to look at your good-looking face for like one more second before you go black, right?
Oh,
because
you do?
you're on your
Okay.
iPad. You're on your iPad, so like
I'm
it
on
doesn't
my
work.
iPad.
Okay, that's okay.
Yeah, so I apologize when I go into my PowerPoint. I haven't figured out how to get my face to actually stay on the screen. So anyway, here we go.
We're going to miss it. Go ahead.
Okay, perfect. So Whatcom Land Title provides both title and escrow services. And I'm going to talk a little bit about those. But before I do talk about the process, most people don't really know what title or escrow is. And
John, can you talk a little bit louder, like a little bit more into your...
Yeah, sure. Is that better?
Okay, thank you. That's good.
Okay. So people, ask me all the time what I do, and I tell them I work at a title company, and they just get a blank stare on their face. They don't know what that is. And some of these people own houses, so I'm going to start out with something a little dry, but bear with me. I'm going to define the, 3 things that I think are important for you to understand as a new homeowner. What is title insurance? People get it. They don't really know what it is. Well, it's an insurance product that protects buyers from financial loss due to defects in a title to a property. So that's really dry, I know, but I want to focus kind of on a couple things in there. The word title, what is title? And defects in title, what are those? So title is just basically a bundle of rights in a piece of property in which a party may own a legal interest. So as the owner of the property, you have the right to the use of the land. That's one bundle. A neighbor may have the right to cross your property to get to theirs. That's another bundle. The utility companies each have a right to enter upon your land to service the utilities. And that's another bundle. So there can be a lot of bundles on your property, and people other than you can have rights to your property to use it in a specified way. So that's what title is. What's a title defect? So a title defect refers to any potential threat to a current owner's full right or claim to sell a property. So that could be an existing mortgage, a judgment, or other rights that are claimed by a party besides the owner. So what does that mean for you guys? Well, a search of the public records may reveal any title defects that a property has. And at Whatcom Land Title, we do that search. And then ultimately, We issue a title insurance policy that protects you from any unforeseen defects. So now that you're an expert on title, I'm going to talk about escrow services. Escrow is the use of a neutral third party which holds assets or funds before they are transferred from one party to another. When does the transfer take place? When both parties have fulfilled the terms of the real estate contract. Some of the things an escrow officer will do is obtaining payoff information for existing mortgages, clearing title for you, the new buyer, recording the new deed, and then dispersing money. So that's kind of the basics of title and escrow, the definitions, basically. So let's go over what happens behind the scenes after the purchase and sale agreement is turned in. So you get that purchase and sale agreement turned into a Whatcom land title, and the title examination process begins. Remember, that's the searching of the public records. Any earnest money we receive gets put into an escrow account, and Oksana, you talked about that a little bit. That's just a holding account that we use until the terms of the purchase and sale agreement are fulfilled, and then that money gets transferred. After a title officer finishes the examination process, searching the public records, they generate what's called a title commitment. The title commitment shows the buyer what the current status of the title to the property is. The commitment can show you existing mortgages, judgments, or other people's rights to the property you're purchasing.
Hey, John.
Yeah?
Well, I think really quick, is there something kind of like random that is pretty common that can come up that can be an issue in title?
Yeah, so something I see, I don't know, it's not quite often, but it's more often than some other issues, some red flags, would be like an existing mortgage that was paid off, but it hasn't been released from the record. So this will happen sometimes when a bank went out of business and they sold, another bank acquired them, and in the shuffle of the papers, the mortgage didn't get released from the public records. And so it's still popping up on the title. Another one that's fairly common is when somebody has a line of credit. So they have this open loan that they can draw upon that's based on the equity of their house, and they pay it off, and they can draw on that loan again. And so people will actually pay that loan off thinking that closes the loan, but it doesn't. You actually have to go to the bank and close it out, and then they'll release that from the public record.
And
so
that can delay closing then if it's not cleared.
Absolutely, yeah, and especially if it's from a couple owners back. So, like somebody like your parents give the property to you, let's say, and then I'm going to say they give it to me, and then I'm going to sell it, and they haven't closed out their line of credit. Then you have to go back and get your parents to sign off on the close of the line of credit, and that can be very time consuming. So, but it's good. I mean, when we do the title exam, we're going to find these things. And
well, I was even thinking about like when there's boundary disputes and things like that, or like a fence is in somebody's yard and those kind of things.
Yep. Sometimes a survey will pop up, and on the public record, it'll show like a boundary line dispute or encroachment of some kind. Somebody's fence is on the property, the corner of their house is overhanging it. And these are great things to have show up. Actually, if they're going to show up and they're going to be on your property, better before you buy it than that you discover these things. And maybe we can get them cleared up. So, so after you're going to get a copy of the title commitment as a new homeowner, and it's important to review it because, like Paul said, sometimes things are discovered that can influence your decision to purchase the property. If you have questions about your title commitment after looking it over, you should contact either the title officer that prepared it or your real estate agent. The escrow officer is going to look at the title commitment in order to see what things need to be cleared from the title before the transfer of ownership takes place. Some of those things can include existing mortgages, old mortgages that haven't been cleared from the title yet. That's what we're talking about earlier, or judgments. If you see something like this on the title commitment, don't panic. These types of things get paid off prior to the sale and they are removed from the property's title. The escrow officer is going to call the lenders and the other parties that have monetary interest in the property, and they're going to, like mortgages, and they're going to obtain payoff amounts needed to remove those items from the title. Then the escrow officer is going to call you up and set up an appointment for you to come in and sign whatever paperwork needs to be signed. And if there's any money you need to bring in, they'll give you that amount and you'll bring that in during your signing. And these signings typically occur prior to the closing date. So that's prior to the date where you're actually going to take title to the property. On the closing date shown on the purchase sale agreement, the deed placing you into title is recorded. If you got a loan to finance the purchase of the property, the mortgage will also be recorded on that date. The escrow accounts are cleared, the money is transferred to the proper accounts. So at this point, the title insurance policy is issued to the new homeowner, you guys. The new policy will probably look different from the title commitment you saw earlier. Remember when I said that the escrow officer will pay off and remove those mortgages and other monetary interests that were found on title? Well, because they are paid off through the closing process, they get removed from the title, and therefore they won't show up on your title insurance policy. So now I'm just going to go over a couple different types of policies, owner's policies. We've got a homeowner's policy, we got a standard policy, and then we have a standard with an homeowner's endorsement and an extended policy. So I know this is hard to see. I'm not going to go over every single line on this, but what I really want to draw your attention to is the 3 columns on the right. So the first column is the standard policy with the homeowner's endorsement. And everywhere you see an X in that column, that is a coverage that the standard owner's policy has. The next column over is the Alta homeowner's policy. You can see that column is almost filled with X's. Oops, sorry. Okay. There we go. I'll go back to here. There we go.
Shouldn't do this on your iPad, John.
Yeah. So the middle column is really full of coverages. There's a lot of coverages in the homeowners. And then the final column is the extended owner's policy. So the homeowner's policy, as you can see, has the most coverages of any owner's policy that we issue. The standard, the column on the left, has significantly less coverages than the homeowner's policy. So why would somebody get this policy over the homeowner's policy? Well, this policy is used if the transaction doesn't qualify for the homeowner's policy. So for a homeowner's policy, there has to be a home on the property, and the owner has to be taking title as an individual or a trust. So if it's taking title as an LLC or there's no structure on the land, then you're going to get the standard policy. So with the standard, there's an option of adding the homeowner's endorsement, which adds some of the homeowner's coverages to the standard policy. So why would somebody get the standard policy with the homeowner's endorsement? Because it's less expensive for the standard with the homeowner's endorsement than the homeowner's policy. And also the homeowner's policy I already mentioned that it has to be owned by an individual or trust. But with the endorsement, the standard with the endorsement, you can take title with an LLC if you want. And then finally, we got the extended owner's policy, and that's typically reserved for large commercial transactions. It has some coverages that a commercial entity would want that a typical homeowner doesn't need. So you don't really need to entertain that option as a typical homeowner. Another thing that puts that out of the range of an average homeowner is it requires an ALTA survey, which is a special kind of survey that has a lot of detail on it, and it's very expensive. So you get less coverages, you're going to pay a lot more. As a homeowner, you're not going to really need that. So that's about it. And I just would like you to consider using Whatcom Land Title for your title and escrow. And we've been in Bellingham since 1982, and we're the only locally owned and operated title company. All right, thank you. Back to you guys.
Thanks, John. You reminded me that I may indeed need glasses because I couldn't read a damn thing on that last page.
That was yeah.
I hope other people did read it. If other people can read it, that means you have 20/20 vision, right? That's like the eye test. Is if it's at that font and you can still read it?
That's right. Okay.
All right, Oksana.
Thanks, John. That was really informative. I don't know how you guys keep all that together. It's a lot of detail to keep track of. So that's why we pass it on to you guys and let you guys take care of that part. And so, yeah, so once we get to that and pass all the title, then that's where we exchange keys and the home is yours. And so during this time, we would like to kind of touch base on the marketing stats, especially through COVID. I'm personally so surprised of how hot the market has been. It is blowing. I'm just so surprised. And so here is just a little graph on the bottom there to show how we even calculate, how do we know that the market is hot? And so on the bottom there, it shows here that if we, are at like 35%, we're strong. If we're 50%, 65 to 75% is, the frenzy. And so we are at 80% right now. And so if you can see on our graph, 80% of the homes that are coming on the market in the first 30 days are pending, and that is extremely fast. And so, one of the other reasons why we're putting this class together for you is because we are really believers that you need the right tools and you need to be prepared and work with the right people in order to succeed in this kind of market. And so like home ownership is so exciting and so stressful. And so you want people that you can trust and rely on to help you guide you through this process, and someone that you can trust to like help you navigate through a competitive market like this. And so with how fast things are going, I am so happy to say that John L. Scott has one of the best tech available to clients who are currently shopping, because it is fast. And Paul, do you want to touch base on that?
Yeah, absolutely. And so, I mean, when you look at this chart, I kind of zoomed it in because for people whose eyes are like mine, where it needs to be closer like this, and under month supply, extreme shortage, half a month supply, which means if it's under a month, that means that there's more homes selling than are coming on the market. Because 1 month would be everything selling, 10 homes come on, 10 homes penned. If it's a half a month, that means 20 homes penned and 10 homes came on. So, and then 80%, like, Oksana mentioned, is unbelievable. So, just to kind of talk about how our company tools work, I first wanted to make a quick note that, when Oksana or, any of us at John L. Scott, when we're helping you look, we have a process. And so it's not just looking online. I want to mention that really quick. We're going to check for sale by owners. We're going to check for new construction. We're going to check for off-market listings. We have Tuesday office meetings where we meet every week and talk about, pocket listings and things like that. We talk about it as much as is ethically and legally able to do that. And so there's other ways that we can also send mailers out, into a neighborhood that you're interested in. So we can hustle and do a lot of things. It's not all internet. But one thing that we know for sure is when you're online, you got to be Johnny on the spot right now. Like, you can't see something come on the next day and then kind of work your way into there over the next 2-3 days. Some homes are having they'll have an offer review date, but a lot of homes can literally sell in a day or two. They can come on and come off just that quick. And so with our John L. Scott property tracker, if you're using Zillow, Zillow can be 4, 5, 6, 7 hours behind the actual MLS, the Northwest MLS, because they don't have a partnership with the Northwest MLS. So, Redfin would be better. And then johnlscott.com we think is the best. So I would put Zillow down here, then Redfin would be pretty close to johnlscott.com, but we have a couple of features that Redfin doesn't have. But one of them is our listings come on johnlscott.com within 10 minutes of them hitting the market. So within 10 minutes, it's going to update instead of 3, 4, 5 hours. And we also do text alerts. That's a program that John L. Scott came out with a long time ago, and we have our own app for GPS navigating. So text alerts are super crucial because you can't check Zillow or johnlscott.com every hour. You're working, you're busy. So if you get a text alert within 10 minutes of a home hitting the market, that is really helpful. And then you can just text right back to your agent, and then you can say, I want to see this, or I want more information, and you're off and running. This is the most unique feature. So let's say that you are getting pre-qualified with Umpqua Bank or wherever you get pre-qualified, and you find out, okay, I'm not really going to be ready to buy for another 6 months. Or maybe you are ready to buy now, but you're just not getting into you're not finding what you're looking for. The Market Insight Report is a really neat report because, so basically, let's say your search is between 4 and 500,000, and you have it set up, and you're getting instantly alerted every time something comes on between 4 and 500 in Bellingham. Well, what this report's going to do every month is it's going to send you a custom report of your search. So if you're looking for 3-bedroom plus homes in Bellingham between 4 and 500,000, it's going to tell you this month there was 6 homes that came on, there was 6 homes that pended. The average price of those was this price, and then it'll give you other details. That way, then the next month comes by, and then you might be thinking, you're seeing things in the news like, this person won the election, this is going to happen, whatever, and you don't know what's going to go on. Well, this is your own custom market report that's updating you on exactly what's happening in your market. So over 3, 4, 5, 6 months, you can look at your own market report. You can see maybe the inventory is increasing. Maybe there's 10 homes that come on the next month and only 5 that pended. So you'll be able to see with your own Market Insight Report, what's going on in your market. So those are just a couple of the tools we offer that, are neat ones to use. And we hope you check those out. So really, like as a team, you're working with a loan officer, you're working with a real estate team, you're working, there's also a home inspector you work with, and the appraiser, and then title and escrow, like a Whatcom land title. And, the home inspection, we could get more into if people have questions about that. But I'm going to stop share and open it up.
Question.
All right. Okay, Angela, thank you.
Rebecca mentioned down payment assistant programs. Where would we look to find something like that?
Yeah, so a great resource to just get a general idea is if you just Google the Washington State Housing and Finance Commission. You can get a ton of information there. But if you had any specific questions, if that program would fit for you, Claudia and I would love to, answer any more specific questions because there are a few little pieces of criteria that you do need to have in place to qualify for that program.
State housing bond, that's for sure the one, yeah.
Yep. I would like to know if you work as a team and keep the buyer connected with each other. Yeah.
Absolutely.
Yeah. That's hugely important for us. As a lender, we need to have really good communication with the agents. We have to have really, really great communication with title and escrow because everything happens behind the scenes. So Oksana gets the really fun job of getting to open the door and presenting your new home to you. And I kind of sit behind the screen and play with numbers and papers all day long to make sure that everything works well. And that whole time, we're in constant communication. We're providing updates. We're making sure that everything moves slowly anytime there's a milestone. So like the inspection happens, check, we're moving forward. Okay, great. I'm moving on to the appraisal ordering. Okay, appraisal is ordered and received, check. And it just kind of keeps things moving quickly because in this market, you have to close on time. There's no ifs, ands, or buts. Sellers have other offers, and they're not interested in a non-on-time closing. So no, it is super important to have good relationships with everyone, and even insurance. It's really important to have a really good insurer as well, because insurance is something that can delay as well. Like, we need to ensure you have adequate insurance coverage for your property. And so, yeah, we work together as a team, and I think that's why it's fun working with people you enjoy.